Good. Okay, we can officially start now. So, good turnout tonight. Thanks everybody for joining. I've got Mike back um, by popular demand. Mike for financial sense, in case you wonder what the FFS stood for. Make up your own mind. And Mike covered this a lot the last time. Got a lot of people really interested. Hence why he's back by popular demand. I saw a really interesting quote that I thought, well, that doesn't actually surprise me, but it was interesting nonetheless. 90% of the world's millionaires, 90% of the world's millionaires made their money through property in some way, shape, or form. And I thought that was really interesting. But it makes perfect sense because it's probably still one of the most, well, it's as stable as you're going to get, but property always bounces back. Property always bounces back. So still very, very popular. And what we see a lot of now is getting started can be difficult because the computer says no. So you go to a traditional lender, and it is a student and work experience. It's typing the stuff in, reading off your balance sheet, puts it into the computer, so the computer says no. And they're end of the story. And that's where Mike and people like Mike are wiping the floor with traditional banking because they're looking beyond the balance sheet. A balance sheet gives you nothing of a business other than an out of date snapshot. And what Mike's lenders do is look beyond the balance sheet. So I'm sure he'll cover that in a lot more detail. So I will shut up and hand over to Mike. And what I'll do is, if you've got any questions, because it's quite a big group, stick them into the chat box. And as we go through, Mike, I'll just kind of interrupt you and shout out as any questions that are relevant come in, and then we can do some questions at the end as well. So over to Mike, FFS.
Hi guys, thanks for coming along. I'll do my best to get through everybody's questions, but to give you a wee bit of an idea of who I am and what my business does. My name's Michael Savage. I'm a FCA directly authorised finance broker. We've also got access to our own monies. Part of that is, like today, for example, I was down on a site just outside Ayrshire, and we've just signed off on £1.3 million of a high net worth money to complete a site. As an FCA directly authorised finance broker, we have got access to over 130 lenders, and that incorporates asset funding, invoice factoring, development funders, commercial funders. We also provide, because I've got a dual authorised firm, so I've got a mortgage element as well. We do mortgages and insurance. But we're a broker that effectively can do anything, as well as provide access to high net worth, who'll put money your way for a project that is viable, essentially. So development, if I'm brutally honest, is high in the agenda of most just now, and where you get through the normal routes, so like bridging funders or development funders, because they're very, very similar. They'll run through like art forums and want to know more about you personally and your background, whereas we'll actually just work on the proposition per se and the people in behind it. And then if the loan to values work and the valuations and everything work and the cash flow and experience and that's there, then there'll be a decision based on that rather than the computer making a decision. From a regional perspective, it doesn't necessarily be, you'll go to some lenders and they'll say that we can't do the Highlands and Islands. Is that Thomas? Somebody just put on something there. Thomas, can you mute your mic, please? Can you hear me now? Yeah, everybody hear us? Yeah. Where they'll only focus on the central belt. We've got access to lenders that will provide funding literally anywhere. So I want to kind of open up the floor and kind of I know that there's kind of a questions here, but if you if there's going to be individuals that want to come back and ask me personalised questions and how you want to look at raise funding or what's the best route to do it, because I'm looking down and it's on my right hand column here. Looking for development flow funding, cash flow funding, development assets, funding for deposits for new property development, buy to let. They're all kind of a separate, essentially, in the process for getting access to that money is like a separate proposition. So where do you want me to start? Do you want me to kind of start? Has anyone got a specific development funding inquiry that they want to chat through, or and I could go over the process for that?
What's probably good, Mike, is just give it. I think what a lot of people have been asking,
Yeah,
prior to this, is how to get started,
yeah.
right? So, in terms of minimum deposits, what's required to get started, being realistic about expectations, how you can build a property portfolio. So maybe just start there, and then we'll just deal with the questions coming in. So Marcella's come in straight away and says, "What's your normal sort of loan to value, ratio? And what's your normal sort of percentage to value loan?" So that'll be a common question as well. So that's probably a good starter for 10.
I take it for Marcello, that'll be on like a development site. Roughly speaking, if you mean you're anywhere between 50 and 60% on loan to value if you're purchasing acquiring a development site, and that'll go off. You can either get it on purchase or valuation, depending on who you go to. So 50 to 60% is the normal rule of thumb. It can get pushed slightly upwards if it's got planning permission and that in place, signed off plan and pre-approved by the council. So that's how the loan to value. If it's anything else, loan to value, buy to lets or whatever, for commercial and resi, they're usually between 70 to 75% loan to value, depending on which lender you would go to.
I've got another couple of things written down here, Mike, and one of the questions is because obviously most people on this call are developers, have got access to development skills, then they can buy comfortably and confidently, maybe not derelict, but certainly run down in need of renovation items that would not normally be mortgageable, right? And also buying things at auction and whatnot. Can you do funding for properties that are in sort of a distressed state, knowing that very, very quickly they're going to be in positive equity?
You can, if it's not solely against that property that you're going to kind of look to do. If there's other security area and you can take a floating charge over something else, then 100%. That's what high net worth will look at. That's what we'll kind of certainly look at, and banks will kind of look at that as well. But the loan to value will be based on what else you've got in behind the background. So you can get 100% for that development essentially, and to kind of to do it up, but you would have to have something in the background that they could take some form of floating charge over.
Right, okay, because that's what Kevin's put in here. So Channel Finance can potentially offer 100% funding via private investor and bridging.
100% and development, definitely. Again, I'll go off the deal that we've just kind of signed off and done today. All the banks rejected it. Our access to a high net worth looked beyond the balance sheet and the accounts and everything, and just looked at the project. And it was a previous chap that was bankrupt that we managed to kind of get it secured, and they never had anything as a result of the bankruptcy, any other security. So it just went on the site alone. But there was a lot of work done at it.
Okay, this is a real interesting bit as well, because you can imagine if you go into a bank. So let's just make up a bank name. Let's say make up a name, Royal Bank of Scotland. Let's say you go into a bank like that, and you mentioned you've been bankrupt. Can you just imagine the alarm bells that's going to go off? Right, the computer says no. Now the computer's going to tell you to leave the building. And the fact that you've got lenders that actually look beyond that, I think, is fantastic. So poor credit does not necessarily mean the end of the road for people wanting to go onto the property ladder. So that again, that comes up quite a lot. Not necessarily bankrupt, but either poor credit or perhaps no credit history. Good.
There's a market, Stuart. There's a market, Stuart, for everybody, and this is the generalised miskind of a conception. There, you've got high street banks, and them they walking in looking for cash flow funding from a high street bank. It's not going to happen unless you've got like a AAA credit rating with 300-400 grand. If you mean values in your properties, it just won't happen. They'll waste everybody's time. But that you've got specialist funders, specialist kind of lenders out there who will look beyond that, and then the step they go further, and this is where there's groups of high net worth now kind of saying, well, if the banks say no, these property specialists are kind of saying no, then we can come in here. But they'll obviously want kind of something in return for that as well. But you can make it work. Nine times out of 10, you can make it work.
Good. Chris has put in an interesting question that'll come to just in 2 seconds.
Yeah.
And the other question that comes up quite a lot, Mike, is, and I know this is maybe how long is a bit of string type question, but where do people stand with personal guarantees? Is that quite a common thing, or is that quite a rarity because of securities? For commercial lending, is personal guarantees a thing?
If 100% personal guarantees a thing, and the majority of lenders will go for them. It's up to the negotiation skill of who's providing your advice to go back to the lender. They'll take the security over the property. There's always going to be some form of guarantee there anyway. But it all comes down to loan to values. If there's enough argument with a lender and there's 50-50 loan to value, then you're not wanting them to take over like a personal guarantee of everything else that the client's got. So you'll ask them to waive that, and it will just be securitized if you're monetized against the property. But yeah, it's the lenders will always require it, but it's not always essential that they get it. That comes down to a fair bit of negotiation back and forward, but it goes on what you've got. But they'll always want it, especially unsecured funding. They'll want some form of kind of a guarantee, personal guarantee. So as much as it's unsecured, you're personally securing it.
Yes. I remember being told that many years ago. There's no such thing as unsecured funding. So but
there's things out there as well. Sorry, Stuart, that you can protect yourself. There is insurances out there, Purbeck being one of them, that you can, if that's the route that you go down, and if that's the only route that you have to go down, you can provide yourself. You can insure yourself through Purbeck Insurance. For that project, the limit's up to like £1 million, so you can have multiple projects and that you've provided personal guarantees for, and that will protect you. It doesn't protect you for the full 100%. So if you owe £1 million, it's not going to protect you for £1 million. Memory serve me right now, they've increased that to 70%. So yeah, 70% that you'll be fully insured for.
Okay, that's good to know. So Chris has put a question in here, which is quite good actually, because it's going to allow you to get some facts and figures. So Chris has put the building plots that I want to purchase valued at 200k per plot. So he's negotiated to buy both for 300k. The building costs are approximately 350 to 400 per house, and the end value when built would be 850k per house. What would be the best way to raise funds for a project like this, and what deposit would be required? Is that something you want to sort of discuss just now, or would that be sort of a one-to-one with Chris? What's your thoughts on that?
It seems straightforward, but a wee bit. I would need to know a bit more about it. I would prefer to speak to Chris, like either on the phone or on email. But for both 300 grand, I take it approximately 350 to 400 the house, 300 house. Yeah, there's 2/3 different funding elements here. Does it need money to purchase it? Does it need money to kind of develop it out? And then the exit strategy is going to be sale. So I think that's a one-to-one conversation. But I can definitely help with that, or point them in the right direction to somebody who would. I know that we can do it as a broker. Do you know what I mean? But I would give the advice on how it would work best.
So, Chris, for that, just email Mike over on the emails I've been sending out to everybody. The 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 email for the CC, Mike's been CC'd on it, so you'll have his email address. So send that email over to Mike, and you guys can have a conversation about that. But good question. Andy's got, how long does the process take, particularly in regards to auction buys? So again, Mike, that was something that a
Yeah,
few
yeah,
people that said they couldn't make it tonight have asked.
yeah, yeah,
How does it work if I want to buy something at auction? Can you get almost like an agreement in principle, or has it
yeah.
got to go by project by project?
Yeah, I think you would not. I work with a number of clients that buy properties regularly from auctions. I think the key here is establishing a relationship with a broker, getting all your fundamentals across, getting everything geared up, and saying hypothetically these are the properties that I'm looking at. Getting decision and principles across, because you don't know what's going to be the purchase price, but you can provide an outline. I'll say that what you're going to go for. But I think preparations is key when you're buying from the auction, and have like a kind of like a backup. So how quickly can it be done? I've provided money to clients within 24 hours. For having, so it can be done very, 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 very quickly. Ways of doing that as well is raising capital from other assets that you might have, raising like money from your own property via some form of kind of a second charge, or taking it out against the property that you're kind of looking to buy. But there's multiple ways to suit however you're wanting to do it. Well, if this is your first time around and you're not quite sure, then we can talk you through a straightforward kind of a seamless process. Or if you've worked with other brokers and their way doesn't quite fit, then certainly I can show you the way that we do it. But it's not that difficult. It's definitely not that hard. And we work with all the main kind of auction houses across the UK, not just limited to kind of a Scotland and Glasgow. And that's what I think Kevin has asked. Where are you based, Mike? We're based in Glasgow, but we cover the UK. I've got two people working for me in Cardiff, if you mean, which is effectively one Bristol, one Cardiff, which is close proximity kind of each other. So we cover the whole of the UK, and we've got introducers that send business to me and for the whole of the UK, not just the fancy places like London or whatever. But we're doing a few things in Manchester, Cheshire, Liverpool, just outside Newcastle, Burnley, Blackburn, Southampton, all over the place.
Excellent. Okay, in from Dav. What kind of interest rates are we talking about for a loan to buy a property where the loan is secured against either that property as a second charge or against a non-mortgage property? So I'm assuming that's a non-encumbered property in our portfolio, e.g. 235k purchase, and let's say we need 30% plus stamp duty. What kind of interest rates are we talking about?
Is it an interest rate in the like to take out a second charge? What, a second charge interest rate, or is it a bridging interest rate?
Tell you what, Dav, do you just want to unmute yourself and just expand on that? You're on mute. You're on mute.
Hi, Mike.
Hi, Dav.
Hi. So this is one that we've actually just gone through, but we've just had that experience of a 28-day auction process.
Yeah.
Incredibly stressful.
Okay.
So everything that you say sounds really good and
yeah.
potentially brilliant for us as we go forward, looking at other properties.
Yeah.
This one here, we've got a number of properties already in our portfolio, and we're on around about, I think, 60% loan to equity at the moment. So we've got 2 or 3 unencumbered properties and home and that as well. We're experienced. We've been doing it for about 12 years now.
Yeah.
And we're a builder as well, so we like to do his own refurbs and everything as well.
Okay.
Do you need anything else?
Yeah, no. So what? So if you're looking to kind of raise money secured, like in the way of a kind of like a secured loan, is that like a second charge or a kind of like a bridge? How do you, what rate are you asking me? What's the best rate for like 235?
So we have a high net worth client
Yeah,
who will lend to us at 7%.
yeah,
So could you do anything better? And he doesn't actually want fees and things as well. What
yeah,
we find is that the interest rate's one thing, but then the fees
yeah.
add a significant amount as well.
That seems like a bit. Is that per annum, the 7%? Or
Yeah.
the yeah, 7%. So aye, to 0.58. Yeah, I think that's pretty decent, to be brutally honest with you, Dav. If you're getting a high net worth providing you with they kind of a sorts of rates, that's even the folk that I could get. There's not enough meat in the bones for them to do anything better. Cards on the table. To be fair, they're potentially looking at something that's not so much a distress situation, but where the banks will say no. You getting the rates, if you mean, are yeah, that's very 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 good, very good.
Do you think your clients will be sort of like averaging out around about 12% or something then, do you think? 12%?
Yeah, I would say circa about 10, dependent on the project. That's where they would come in, circa about 10.
Thank
But
you.
yeah, again, it's worth kind of having a conversation if you don't want to over leverage that high net worth. If you mean with a few of your kind of a projects, then we can certainly have a conversation. But I wouldn't want to take you out of something that's pretty decent and put you into something that's worse off.
Yeah.
So yeah,
Yeah. As you say, it's the appetite.
definitely. But
Yeah.
whereas we've got high net worth, so it's got appetite for all. So it's dependent on the project, which is going to reflect what rate they can do. But they're circa around about 10% from a high net worth perspective.
Thank you.
If it's going down like a bridging route, then you're right in what you're saying. They do accumulate fees, and then that's got like 1% effectively from an engagement perspective, which the lender takes, which they share some of that with the broker, which is 50%. Everyone will know that, or if you don't, I'm opening that up, and that's added to the loan. So if you're outweighing that, if you mean getting that, then yeah, it's but you can go down as little to 0.75 on bridging. We sort of dependent on whether it's commercial or resi. You can go down to 0.75. Low rate
Thank you.
per month.
Good stuff. Okay, Dav. If you've got any more questions, just email Mike. So another question come in here from Chris. Chris is saying, is it easier to start into developments personally or through my limited company?
From my own experience and from being an accountant, I would always say if you're serious about it and we're talking about personal guarantees and sole trader and all that sort of stuff, then put it in a limited company. There's many tax positives for putting it into a limited company as well. You get your SIT code right. You can go down the deferral routes. There's many advantages if it's not one and done, and you're going to look at it to properly do multiple developments. You build up a name with yourself as well, and then you can set up SPVs from limited companies per project. You also protect yourself, if you mean by doing it that way. So I would always, personally speaking, there's two ways, and I'd certainly speak to your accountant for your own personal financial circumstances, but I would always say, and then what I advise my own clients is do it through a limited company.
Okay.
Banks, lenders, high net worth prefer that as well.
Dav has put in there about a caveat about auctions. Finance is just one part of the process. Yes, conveyancing. Yes, as soon as you get solicitors involved, it all goes pear-shaped.
Oh, tell me about it. Tell me about it. That's the bane of my life. It's surveyors and then fucking conveyancing solicitors. Unbelievable. Bane of my life. That's how I'm
Don't
probably
worry,
getting to 10
AI
o'clock
is
most
coming.
nights.
AI is coming.
I'm in here at
Lawyers
10 o'clock
beware.
most nights trying to deal with that nonsense.
What's one? That's one industry that won't give a shit when AI wipes the floor with it when
No,
solicitors
definitely not.
disappear.
No, not a
Oh, I
chance.
better watch
You
out 'cause
get
this is
some.
getting recorded.
Again, no. Again, guys, if anybody wants like a access to goods survey, like conveyancing solicitors that can get the job done and don't charge a fortune, and you're on the clock with their bill going up, then I can certainly put it nationwide. Doesn't not limited to Scotland. I can certainly kind of put my tuppence worth in that way and pass them on.
Excellent. Good conveyancing solicitors. That's a contradiction in terms. Anyway, moving swiftly on. Ian is asking, are hunting licenses still a thing? I'm assuming that's not for foxes. Are hunting licenses still a thing where you can get pre-approved for a value of lending? Any experience with that, Mike?
Yeah, the hunting licenses. There are a few specialist kind of lenders that do it, but it's all against your background and what you have in the background. So they'll leverage it against what portfolio you've got. If you don't have a portfolio per se, then the appetite is very weak for them to provide access to money, and that's the honest answer. So yes, they have, but it's very dependent on the person.
But it's still there. Okay,
And I've
that's
provided
good.
a few. Yeah, I've provided a few in the last 12 months. They're not commonly spoke about because a lot of people don't know about them. But yeah, you can certainly get access to them. And we know of like 3/4 lenders, one high net worth that can do it. But it's leveraged against what you've got in behind the background.
Excellent. So, Mike, not Mike, Ian, you might want to just sort of reach out to Mike one-to-one on that because it looks like there could be something there for you. Next question from Sunny. Sunny's got, I'm potentially looking to purchase the office yard space that I currently rent via my business. What would the next steps be? So next steps probably I would say getting it valued, Sunny. So over to Mike. What
No,
would you say the
no,
next
no, no,
steps
no,
are?
no. Don't value it if you can get an indication of value, because any lender that you're going to go down from, like a trading business borrow, is going to instruct their own valuation. So if you get it valued, you could be spending your own money.
Good
So
point.
getting an indication of what the valuation is, and getting an agreement, if you mean. So if you're looking to buy it and they've got a willing party to sell, then hypothetically say that this is what I'm going to buy it for, and then speak to a broker who can put everything together. If you're a trading business, then you can demonstrate, yeah, from a cash flow perspective, that you can get the borrow on the loan to value. That's a fairly straightforward transaction, and one I've went through personally myself recently with this office. So yeah, I've not only done it multiple times for many clients, I've done it myself. So if you're looking for any help with that, and even if it's just a case of putting you in contact with your bank or making sure that you get everything, all your ducks in order, I'm happy to have that conversation. No problem at all. You'll get decent rates because, yeah, you're looking to buy the yard and space that you're in.
Excellent. Okay, Sonny. So it looks like the answer to that one is speak to the landlord, get an indication of what they're looking for the building. Have a laugh because it'll no doubt be grossly inflated if it's the landlord. Speak to Mike, get an indication of how to fund it, and then the process with valuations and negotiations can start. But I think this makes perfect sense. When I had my own business, we had 10 print centres throughout Scotland, plus the factory, plus 2 shops in Glasgow, and I would never rent. Never rent. Why pay somebody else's mortgage? So we owned all the properties. Biggest mistake I made was I left them in the name of the main limited company and didn't put them into a separate limited company. Dickhead. So Dav, silly question. What is a hunting license?
Hunting license is money or access to money which allows you to go and buy properties secured mainly on other assets. So you would have like a limit of £500,000 or £1 million that you can draw down on at any time to purchase property. So that may be when, Dav, now you were asking earlier on that you go to the auction a lot, and maybe your high net worth, I'm sure, will not be able to help you with this, but I can certainly put you in contact with a few people who would provide you with a hunting license. Because you mentioned that you've got 60% loan to value and some unencumbered properties. So you could leverage against them to provide you to purchase a properties quick, get it done, less bullshit from the legal people and different things, and then you could term it out. So yeah, hunting license would probably suit you. Dav.
Mike, here's a question from me, based on the shit advice that I got very early on. Who's the best to give advice? Would it be you, be lender, or the accountant on the? I'd imagine it'd be the accountant on the best way to structure property portfolios so that the wealth is protected.
Yeah, your accountant or a good accountant should, but you can also kind of lean on your broker. Why? Because your broker will deal with multiple of these kind of transactions, where your accountant maybe deal with a few here and there. Because your accountant, you need to remember, is not specific to property development or dealing with property portfolios. So they might have 2 or 3 property portfolio clients, whereas a broker is going to have, well, I do know that this year alone, you've done about 13 or 14 kind of transactions of that ilk. Not me alone, but I've got Simon, who used to work for Shawbrook, came into my business, and I've got Carlos, effectively, who used to work for kind of Together. So we're constantly kind of working with guys like yourself to enhance and build a property portfolios. So a starter for 6 would just be kind of having a conversation, because there's not much that they guys wouldn't have seen, where your accountant will try and go and find out about it. And again, I come from an accountancy background, so that's an OBS approach.
Excellent. So speak to Mike, FFS. So Louis just put in, can you lend money to buy another business? So we're kind of moving away from sort of the property questions here, and looking to acquire additional businesses, which is a great growth strategy. I think business acquisition is brilliant. Can you lend money to buy another business? If yes, what is the process?
You certainly can. Depends on what type of business it is. If they've got a factoring facility in place, or they have multiple kind of revenue streams kind of in place, you would leverage against that to purchase out. So there's about 2 or 3 different avenues that you can go down. You can keep the folk that's in the business that's there, keep that trading for 2 or 3 years, whatever kind of a time it is, and buy them out by getting your bank to take on the goodwill of the business that you're purchasing. So there's 2 or 3 different avenues that you can do it. Again, something that we're kind of a fairly strong in with growth, and we're actually going through that now as well. And we're doing it through the goodwill of the business. We're lending against that to purchase another.
Excellent. Louis, I would suggest you speak to Mike on a one-to-one on that. And if you want as well, I created a checklist, a due diligence checklist. I'll send you that tomorrow, which is just handy when you're doing a business acquisition. There's about, like, it's just a minefield when you're doing due diligence. So if acquisition is on your radar, this will definitely help you. What else has Dav got here? How much does it cost to sell a property from a business name to a limited company, and could that cost be financed?
It's going to be the tax element of it, if you mean. So if he's looking to put it from his personal into a kind of a limited entity, he's going to be due tax, land tax, LBTT. So depending if it's commercial or residential, there's going to be some form of kind of a tax there. Can you fund that? Yes, you can. You have got specific funders out there who will fund that element, and provide up to a maximum of 12-month terms. It's not like a bridge, but it's very, very similar to a bridge. It's like an HMRC loan, essentially. Rates to that are circa between 0.75 to 1% per month, if you mean. So you can do it and then kind of claim it back. So yeah, you can fund it.
Thank you.
Excellent. Okay, I think that's us caught up with the questions. Any more coming, I'll field them. So next on the list of people that were asking questions that couldn't make it tonight, quite a hot topic just now is cash flow funding. So
Yeah.
I can appreciate now that it's more of a sensitive topic. So if you've got specifics around cash flow funding, and you don't want to sort of put it into chat box and talk about it, then speak to Mike. But Mike, can you talk us through cash flow funding, in particular around what I have always referred to as factoring, but I think what's more commonly known now as invoice discounting?
Yeah.
And the common questions are this: how much does it cost? And do I have to factor all my clients, or can I pick and choose? Give us a heads up on how invoice discounting works, Mike.
Invoice discount and invoice factoring has went huge over the last kind of a 24 months. Specific sectors, construction, haulage, manufacturing, bus and coach, it's limitless. And where banks are kind of a withdrawing overdraft, are not providing cash flow, the factoring companies are coming in. So how much does it cost? Again, I'm not trying to body swear this question. It really, really, really depends on what the proposition is for the lender, but it's really, really not that expensive compared to waiting 60, 90, 120 days to get your invoice in. So it's on a case by case basis, but you're probably talking for something like 100 grand, you're probably talking £300-400 a month, something like that. What it would be costing on a monthly basis to get that through. But if you look at it, if you're waiting on 40 or 50 grand of your cash to come in because somebody can't pay or somebody won't pay, then the factoring facility would provide you anything up to, dependent on the sector, by the way, 85% of your, it can go all the way up to 95, but that's just bullshit because that's recruitment and everything like that, which you guys are not in, the greatest respect. So it can go up to kind of 85% on the proposition, and that's where you would put your invoices in. So if it's 10 grand, then they would pay you 8.5 grand day one, or you'll be able to draw down an 8.5 grand. There's a misconception that they'll take the £1,500. That doesn't happen. When the money's paid to the factoring company and then paid across to yourself, they'll take their fee and then remunerate the rest across. So you'll end up with your 10 grand minus the cost. So there's this huge misconception there that they'll take they'll take the 15%. That doesn't happen. You will get it all back minus kind of a whatever cost. What was the other question there? What was the second one? What was it?
Percentage release, sort of cost of factoring, and do you have to give them the whole book, or can you pick and choose what clients you give them?
That's it. So do you need to give them the whole book? No. There's specific lenders out there that will do selective invoice and discount factoring. So you can pick and choose. Again, one thing to remember, of factoring, it's not, all the due diligence is not done on you or your business. So they're not really interested, with the greatest respect, on what you do. They're more interested in who you're working for, or who you kind of are subbing the work for. So the better the company that you're working for and what their kind of a credit looks like, is the better terms that you're going to get. And the selectiveness, if you get somebody that pays you in, I don't know, 10 days, and there's good argument to kind of say, well, I don't really want that in there, then that's it. It would fall into the kind of the selectiveness. So you could kind of pick and choose what one you put in. So the guys that are not paying you after 60 or 90 days, it can be more problematic. Then you're going to put them into the factor, because then you're going to get paid in day one. So if it's a 10 grand invoice, you're going to get like 85 grand for £8,500, sorry, on day one, which ultimately keeps the wheels turning and keeps everything going. And the beauty with that is, from a factoring perspective, you've got all the legal resources behind you. So if that client doesn't pay and they try and take the piss out of you, then they'll go after them, if you mean, to ensure that they do get paid.
Absolutely. So couple of points there if we go back to the question. So I've got one client just now who's using invoice factoring, and they're in a quite a rapid growth element just now.
Yeah.
And that growth was catching them out because they were constantly hitting the buffers with cash flow. And they started to do invoice factoring and invoice discounting. And now actually that rapid growth is actually fueling the business because they're getting their money straight away. Right.
Yeah.
Number one. So they rave by it. I would say the other advantage as well that they kind of swear by now is when they're taking on clients, the factoring companies obviously doing the credit chasing and the credit reports rather.
Yeah.
And Michael know this that bank to bank talk different languages than you and I'll ever get information wise. So they're only lending to not sure things obviously, but they're certainly doing their due diligence on who they're going to offer credit to. And they said that's helped him a heck of a lot because bad debt had been a problem in the previous years. So there's a few advantages there aside from obviously just getting the money from day one.
Because you'll
Go
get
back to the questions then. Sorry, Mike.
Sure. You'll get a lot of kind of like, and you've probably heard it in your industry, subby bashing. Then having a factor. I'm not trying to say it totally prevents that from happening, but it's a lot less risk if you've got like some form of kind of a factoring facility in place, because they'll tend not to do it. And if they tend not to deal with a factor, then you probably don't want to deal with that company anyway. That's from my own experience, because as much as I've just told you about the positives there of doing like a 1.3 million developing and everything, I've also had some clients over the last 6 months that have been out of pocket hugely. If you mean £77,000 for one of them just now, not too far. I can't obviously name names or whatever, but that he's going to have to like Phoenix his business and everything like that, because the subcontractor, and he took it on his own head, and it was selective factoring facility that we put in place for him. For 77 grand, he's going to kind of lose a fair bit and have to kind of shut it down and start again, which we're also helping with. But again, it's not great. It's not great.
Hear that quite a lot, sadly. So Chris has put in, how can we find out how much we can borrow stroke finance to get started so that we know what market range we can look at?
How can we find out how much we can borrow finance to get started? In relation to what? Development, to start your business, what type of business, and how much money you can get access to? If you're starting a new business, if you mean, and it's just starting out, everything for the first probably 12 to 18 months is going to be against you personally, and what you've did in the background. How we've seen it kind of happen, depending on what area of expertise that you're in and what you're doing and what you're kind of looking for the money for. Folk tend to kind of leverage some form of like second charge against their own property or whatnot, and that gets them cash flow from startups and whatnot. You've got like DSL loans and other multiple kind of lending firms that will go on a project by project basis, but that's against what you've got to offer, and what your past looks like. But you've got multiple failed businesses, previous bankrupt, if you mean, or you're not a non-homeowner, all this will affect them kind of giving money up front. And then what
Chris, is this for a property port? Was this to start on a property portfolio?
Yeah.
Right. So
okay.
if you
through the business.
So property portfolio through the business. So what you want to know is what funding would be available to give you an indication of what sort of properties you can look at. Yeah.
Yeah.
Does that help, Mike?
No, it does. Yeah, again, anything we can get. If you see properties that are valued at like 100 grand, if you mean, and you've not really got any money to put down on it, and you've just got bits and bobs to pay, we can help you with that, because we can find lenders that will kind of fund off valuation rather than purchase price, so you can do very minimalistic. What I would say is you would probably need to kind of have the bare minimum to cover the legalities. That's what I would say. and then be mindful that you would be able to, it would be like a short term to like a short and then kind of a long term. So if you're taking the money, you're going to be, we'll potentially have to roll that up. So we might use all the valuation to kind of make you no pay any payments for like 3 to 6 months, and then effectively we could term it out, or you can add it to your portfolio. So how much money do you need? I can get, there's no limit on the amount of money because it's on a case by case basis. If you've seen something there that was valued at £1 million and you were getting it for 700, could I fund that for you with very little money down? Yes. It's not, then it becomes not so much about you. Do you know what I mean? It's against, it's a project, and we can kind of find avenues to get that funded. But as long as you're
That
covering
makes sense,
the
mate.
legalities, as long as you're kind of covering the legalities, then we can 9 times out of 10 make sure that we can make it happen.
Okay. Back to the questions. Shazad, for startup, would you advise remortgaging your personal property to buy another property, or taking a bridging loan in the company's name?
For a startup, would you advise remortgaging your personal? I would advise taking some form of money out if you believed in what you're going to do. Taking it against your property is always, that's always good, and it's something a lot of our clients have done more recently. Whether it's that remortgaging, right? That's the most simplest, the most cost-effective way, by the way, or taking like a second charge out and then taking the money out for like 2 years, for example, and then remortgaging it back in. Personally, that will be the most cost-effective and tax-efficient way. Bridging is going to be that bit more expensive, but it's really dependent on what type of business that you are. And you can put that into the company as a director's loan, and then once you've fulfilled that, you can pay it back out again. So I would always, if it was me personally, and just me personally, if I've got equity in my property, then I would take some form of kind of a second charge and then remortgage my property. That's how I would do it.
Yeah.
Because it's
Tim,
rate-wise, it's cheaper, but much cheaper.
what's Tim got here? Tim's got, what's the best way to protect your assets each time you finance a new project? Do you set up a limited company for each, for example? What's the best way to protect the assets?
Individual assets, within the property, or you set up an LLC each time, for example. You could, you can do that. It depends on if it's an individual asset or it's multiple assets. If you're talking about separate developments, then definitely set up individual LLCs. If it's not, and it's you're buying project by project, property by property, then the best way to protect it, I really don't know. I don't know.
That's probably an accounting question. There's two considerations. There's wealth protection, but there's also taxation as well.
Yeah.
So I would, because obviously with limited companies, you've got various fees and accounts and blah blah blah. I would say that's maybe an accounting question, Tim.
What's the best way to protect your assets each time?
What else have we got? I think Matthew's got a
Putting
lead-on
it into
question.
a trust. Putting into a trust. Sorry, if you mean kind of putting them into some kind of a form of trust, or like a pension kind of a SAS individually, and adding to that, then that would be a kind of a route to go down. But I was looking at it purely from a finance perspective. If you mean so, it's each, and I don't know if that's the question you're asking, Tim. It depends on the size of the project. So if you're doing a project in Ayrshire, which has got 10 properties, and a project in Lanarkshire, and it's got 10 properties, set up different SPVs for them, 100%. Because then they're not going to, if something happens with one of them, it's not going to bring the rest of them down.
Exactly. Matthew, I think, has got a follow-on question here. Would that be the same recommendation for a first business premises purchase, for example? So to have the minimum for legal expenses. I'm not quite sure what part of the conversation that was leading on from, Mike.
What's that? Sorry, from my manufacturer.
I think it was a question that, following on from the question that Chris Russell asked when you were talking about having the minimum legal finances solvent in regards to borrow. What did he say? Borrow finance to get started, as in like a startup, I guess.
That
makes sense, mate?
No.
Sorry, maybe I was putting my question on his question without fully understanding it. Basically, I'm looking at perhaps from your advice, what you're talking about earlier, about perhaps looking at buying a first small business premises rather than renting. And I was just wondering whether the same advice in regards to borrowing would stand. Just have, like, make sure you have the minimum sort of financial support to deal with the legal side of it before looking into lenders and stuff.
Oh yeah. Oh yeah. I get you now, Matthew. Yeah, 100%. Yeah. So to ensure that you've got, so you're putting in if you're buying your first kind of a business premises, it's going to dependent on what type of commercial it is. It's going to be anywhere between like kind of a 65 and 75% loan to value. So yeah, I can get you money on the valuation, or I can get you money on the purchase, depending which is going to be kind of advantageous for you. But we can make it work. But at the very least, ensure that you've got your legal costs there, because that's one of the things. And even from a land tax perspective, we can fund that for you as well, and we've done that multiple times. So the legalities is probably the one thing that I would kind of ensure that you've always got, and some, if you need a form of deposit dependent on the loan to value, if you can make it work, or you know that you can kind of make it work, then yeah, ensure that you've got the legality money.
Right, thank you.
No problem, Matthew.
So Steve Elton has put a question in here. Oh, he's gone. He's back. Excellent. So Steve, I'm assuming this is for an asset purchase. So Stephen's question is, from a manufacturing angle, are we able to secure finance
100%.
off the back of a contract?
100%. Yes, you can.
There you go.
Yes, you can.
Fill your boots.
Do it every day, all day, twice on a Sunday.
Excellent.
So you can, and they don't really look into like the particulars for it. So as long as you can project how much that piece of equipment is going to get you off the back of that contract, and you can have terms for that contract, and if the contract's there, then they don't really look into anything else other than that. So I've done it for new start businesses. So yeah, I wouldn't say it's very straightforward, but it's something that we can do, definitely. Circa wise, loan to value, you're probably going to have to kind of put something into it. But I would say as a rule of thumb, to ensure that you've got 10% to put in. So if it's 100 grand, if you've got 10 grand there, and I can even get you, if you're VAT registered, a VAT deferral on it. So yeah.
So the only time, Steve, that might become a problem with the contract is if you've got a contract in Canada to supply steel to America. Then you might find it difficult to get lending for that just now.
You're fucked. Or
it looks like America's going to war with Canada.
Or Ukraine to Russia. That way, but nobody's helping.
The world's gone crazy just now. We're going to war with Canada. Sabrina in text that not be rude, just leave. Okay, that's no problem. Brilliant. I think that's all the questions done. Bang on time as well. So that's been absolutely brilliant, mate. You've gave every tons of information there. Reach out to Mike. I'll be emailing everybody tomorrow anyway, so you'll have Mike's email address again tomorrow. We just skimmed over the kind of invoice discounting, invoice factoring, because we know from the last time it's quite a personal topic. So if that's of interest, either to you guys or people watching the recording, reach out to Mike about that. Any questions, any funding, reach out to Mike for Financial Sense. That's what FFS stands for. Mike, have you got anything to wrap up?
Yeah. What I was going to say there is it's like we're a kind of a facet finance brokerage. We access to kind of our own money. It's not just me. I've got a team here. So even if I can't help you, and I want everybody on the call to kind of realise this, I'll probably and more likely put you in contact with somebody who can, which is highly unlikely that I can't. But if I cannot, then I'll certainly use my relationships to put you in somebody who kind of I can. So even if you think that question is, I'm not going to send an email because this is just stupid, there is no such thing as a kind of a stupid question, because I'll reply back to you and give you an answer. And if it's just 5-10 minutes, then yeah, I'll run through it with you. But we can do anything that you're kind of looking for. So yeah, just reach out.
Excellent. Bang on time. Okay. Yep, everybody just saying thanks. Everybody been in touch. So thanks everybody again for coming along. That was really good turnout, which is always great. We've got people like Mike coming along, giving up their time to help business owners out. Because yeah, it's tough times. You know, we're wanting to look and be one step ahead of the competition. So buying smart is important as selling smart. So thanks again, Mike. Absolutely fantastic. I'm sure the guys will be reaching out to you with plenty of questions tomorrow. And thanks again. Look forward to seeing you next month when we've got more experts join us. Have a fantastic evening, everybody. Thanks again.